You don't know what it was? Was it, were you outside? Okay. Yeah, you too. I'm gonna wait a few minutes. A couple people on the door. Okay, you guys, do you have any questions before we start? Okay. So we finished part of chapter 11, and I just want to make sure you guys understand what this manufacturing overhead piece, as you allocate it, you are going to put it on the right side, which is essentially decreasing it. And then as you have your actual overhead, you are going to put it on the left side, which is increasing it. At the end of the time period, if you have, you're going to, as you add and subtract, and then you're going to get a balance at the end of the year. So say like you have 100 over here, you're going to have to zero out this account, which means you're going to have to put 100 over here. And then when you have cost of goods sold, you're going to need to put 100 on the left side. You put 100 over here, so you got to on the right, so you got to put 100 over here on the left. So it's going to increase your cost of goods sold. And then conversely, if you have 100 over here at the end of the time period balance, then to zero it out, you put 100 on the left side and then 100 on the right side of cost of goods sold, which would decrease your cost of goods sold. So I want to make sure everybody's okay with that, and see if you have any questions. Everybody's good with the manufacturing overhead part of this, and all right, let's keep going then. We're going to do a schedule of cost of goods sold and manufactured. This is sort of tedious, so if I were you, I would write this down and use this for the exam. You're not going to have time to figure out every piece of this during the exam, so make sure you're comfortable with it. So this is very similar, if you think about it like this. The three parts of your manufacturing costs are materials, and then you have labor, and then you have overhead. So this is the start of your cost of goods sold statement. When we're talking about overhead, it's the end of the year, you should have your actual. So as long as you have your actual costs, you want to go ahead and put the actual on there. Then it gets a little hairy, because when we're talking about inventory, we can't just put however many materials that we spent. It has to be the cost of the materials that we have sold. So for materials, I left a bigger space, hold on. For materials, and you've seen this formula before, I'm going to start with my beginning, and this is for raw. Start with my beginning balance. I'm going to add my purchases. I'm going to subtract my ending balance. And that's going to give me my total raw materials. Okay. From there, then I add the labor that we just talked about, and then I add the overhead, the actual, if you can. So you have labor, and these are all direct costs. And then I should say direct labor. And then this is direct. And then you have your overhead. From there, that's all your manufacturing costs. Then you are going to talk about your work in process. So work in process. Again, it's going to be the same formula. You're going to start with your beginning balance. You're going to add your purchases. You're going to subtract your ending balance. And that's going to give you your work in process. Okay. This is your cost of goods manufactured. And then finally, to get cost of goods sold, the last part of this, there, I'll flip that. And I'm hoping that you guys can all see what I'm writing on the board. But I have a feeling. Okay. Hopefully you can see what I'm writing on the board. And then finished. Finished goods. Again, we're going to do beginning balance plus your purchases minus ending. And that finally is going to give you your cost of goods sold. So again, this is tedious. There's a lot of information on here. Just make sure you're comfortable with it, and then if you need to fill in any of these numbers, that you can. Okay, are there any questions on that? All right. This is year 2, and it's just comparing the 2 years. If you are in your first year, you're not going to have a beginning balance. So I just wanted to point that out. I think you guys know what overhead costs are: indirect labor, indirect materials, and everything else not to do directly with the production process. Balance sheet. So if you are, let's say you're a service company, you're not going to have any inventory really. And if you are a Walmart or something like that, all you're going to have is inventory, one inventory account, and what you paid for that inventory. If you're a manufacturing company, you have 3 sets of inventory accounts: raw materials, work in process, and finished goods. And that's what this is showing here. And so again, you use the same formula: beginning balance, add your purchases, subtract your ending balance to get those final numbers for each of those. Income statement is going to have your cost of goods sold there, and that's that final number that we came down to way at the bottom there. So again, the 3 inventory accounts. Production supplies, those are indirect materials. Okay, so let's do a couple of these problems so you can see how this works. We only have 3 more classes. Well, after today, we only have 2 more classes, which is fantastic. Okay. I mean, I love you guys, but lecturing to like an empty computer screen is horrible. Okay. Okay, so let's look at exercise 1111. Okay. So what we're going to do here is it gives you the beginning balance for each of your 3 inventory amounts. So if I were you, you can either do T accounts or you can just do a plus minus system, whichever works for you. So raw materials, that's too big. Let me write smaller. Raw materials, work in process, finished goods. So I'm just going to do a T account. It wants us to keep track of how much is in each account. So with this, with all assets, to increase is going to be on the left, to decrease is going to be on the right. So let's just start with the beginning balances. So raw materials is 30,000. Work in process, 45. Finished goods, 14. Okay. During the accounting period, they purchased 125,000 of raw materials. Plus there, that's on the right, that side. And issued 124,000 of raw materials to the production department. So that means that 124,000 went from here to here. I'm going to subtract it from raw materials. I'm going to add it to work in process. Direct labor cost for the period is 162,000. That goes in work in process. And overhead was 24,000. I'm adding it to work in process. No over or under applied overhead. Goods costing 306,000 were completed. So I'm going to subtract it from work in process, add it to finished goods. Goods costing 301 were sold. So subtracting it out of here because we sold it and it's no longer in our inventory. And goods costing 306 were produced and completed and sent to finished goods. So before we worry about the other numbers, all they wanted us to do was get an ending balance for each one. So I'm just going to add everything on the left and subtract from the right. So what, that's 31,000. So I have 31,000 in my raw materials. I have 49 in work in process and 19 in finished goods. Are there any questions on that? Okay, so what I want you to do is go ahead and I will pull up exercise 1111B, and we'll just do the first part, and then we'll talk about putting it into financial statements. Okay, so I'm going to let you do this one. So it just gives you, and instead of doing a nice little table, raw material started out with 3,000, work in process started out with 3,600, and finished goods started out with 3,960. So go ahead and try to get your totals for each of the three accounts, and then we'll talk about how to put these into a cost of goods sold financial statement. I'll give you a few minutes. Does anybody need more time? All right, so your raw materials should have been 3,600. Work in process is 5,640, and finished goods is 6,120. Everybody, I want to make sure everybody's okay with that. Okay. So the next part of this is going to be to do a cost of goods sold format. And you're almost really just copying down a lot of the stuff that you just did. So remember, we start with our 3 costs, starting with materials, and it's going to start with raw materials. So your raw materials, your beginning was 3,000. And stop me if you guys have any questions, please. Purchases was 3,400. Ending balance, subtracting out 36. Good. So that means my raw materials is 19,800. Everybody can see this. Okay. And then we have direct labor. Which was 22,800. And then overhead. $22,440. So we add all those together. That's all of our manufacturing costs. So these 3 numbers, 65,040, manufacturing costs. So now we need to worry about work in process and then finally finished goods. So we have beginning, work in process, that was given 3,600. And then we're going to subtract out ending. That gives us our cost of goods manufactured. And then finally, finished goods. So beginning, finished goods, and subtracting out ending. So cost of goods sold is 60,040. Any questions? It is a lot and it is tedious, but I would just get comfortable with what these are. So if you have a sheet of paper with all of this written out, you can just kind of fill in the blanks. Okay. Are there any questions on that?
I do. If this is like a test or quiz question, what would it be looking for in this?
I can ask you like, what's the final cost of goods sold? If I give you if I give you the, or cost of goods manufactured. Those are the 2 really that people care about.
Okay. All right, that's it.
Okay. All right, so let's go back to PowerPoint. Actually, let me do this. Okay. Okay. So the last part of chapter 11 is absorption and variable costing. There's 2 different ways of looking at how costs are allocated. So up until now, we've only done absorption costing. Absorption costing is what GAAP recommends. It's what you have to do for any sort of official financial statements. And basically, it's what you guys have always known. So then we're going to look at that difference between that and variable costing. One major difference. So the major difference between absorption costing and variable costing is your fixed overhead. So fixed overhead, and I would write this down, fixed overhead in absorption costing is part of the cost per unit. Fixed overhead and variable costing comes after the cost per unit, so after your contribution margin. So we'll see how this all works out. The absorption costing, again, what you guys have always done, what you're used to. So you have fixed overhead that they've allocated to the 3 different things that they're making. No, 3 different levels that they're making, the amount of units that they're making. So as you make more, the cost per unit is going to go down because that fixed overhead does not change. So, and we've talked about this before. So the more you make, the less the cost becomes per unit because that fixed overhead is always going to stay the same. But if you use variable costing, it will not work that way. So this is the gross margin for each one. Variable costing is going to have that fixed manufacturing overhead that's here. Why did it do that? That was weird. Okay, that fixed manufacturing overhead here is going to be after the contribution margin. So your cost per unit does not change regardless of how many you make. So what they're talking about in the slide before is that because the cost goes down per unit, the more you make, it may, or it tends to motivate people to want to make more so that their costs go down. Using variable costing, it does not do that. We're going to look at an example. If you make more than you sell, then actually your income statement is going to change. Your net income is going to change based on which one you use. So again, the fixed manufacturing costs are down here. Also with variable costing, if you have any sort of variable selling and admin expenses, that now becomes part of your cost per unit. Okay, so in variable costing, anything that says variable goes before contribution margin. Anything that says fixed goes after, regardless of whether it's part of the manufacturing process or not. So let's look at an example. Okay. So we're going to look at 16A. Okay. All right. So here you have your direct materials, direct labor, overhead, which includes variable and fixed overhead. And then you have variable selling and admin expenses and fixed selling and admin expenses. So the first part wants you to prepare an income statement using absorption costing. So the absorption costing is just going to split your overhead and then your selling and admin expenses. So included in cost per unit is everything under overhead, and after that contribution margin, after cost per unit, is going to be all of your selling and admin expenses. So what I would do to set this up is if you produce 1,500 and sold 1,200, start with your revenue. Your revenue is not going to change regardless of how many you make. You have revenue. So you made, or you sold 1,200 and you sold them at 225 per unit. I don't have the answer in front of me, hold on. I can't do that math in my head. So revenue is going to be 270,000. That's not going to change regardless of which one you do. And then when we're talking about cost of goods sold, you have direct labor. I'll do materials first. Direct materials, direct labor, and then your manufacturing overhead. Okay, so direct materials is $50 a unit. So it's going to be, and then direct materials, or excuse me, direct labor was $35 a unit. And then manufacturing overhead, I'm using both variable and fixed. So I'm going to get a total of 40. So that gives me a gross margin of 120. And then from there, I'm going to subtract both my selling and admin expenses. I'm going to do variable and fixed. And that totals 30,500. So my net income here is 89,500. So that's using absorption costing. Everybody okay with this? Any questions? Okay. So the next one is using variable costing. Revenue, direct materials, direct labor stay the same. This time I'm putting anything that says variable, I'm putting up above that contribution margin. So variable overhead. And we said that was $15 a unit. So I'm going to subtract. And then variable selling and admin is 10,500. So now my contribution margin is 139,500. From there, I'm going to subtract my fixed costs. So I have manufacturing overhead, fixed. That is 37,500. And then my selling and admin fixed. And that is 20. So net income of 82,000. So that is different than a net income of, I think it was 87,000 before, 89,500, significantly different. And that is because I produced 1,500 units, but I sold 1,200 of them. So I produced 300 more than I sold. So if that's the case, my variable cost and income statement will be lower. Any questions on that? Okay, so why don't we do, I'll have you do exercise 16B, which is similar. Okay, so in this case, again, you produced more than you sold. So your variable and your absorption income statements will be different. So first, use the absorption costing. And what you want to do is, again, revenue, direct materials, direct labor are going to be the same regardless of which one you use. But with absorption, you want to have all of your overhead up here before your contribution margin. And then all of your selling and admin at the bottom. Variable, you're going to do variable up on top and then fixed on the bottom. So go ahead and try it and see if you get. Let me know. anybody need more time doing their absorption testing total? Everybody hopefully get 38,600.
How much was that again?
38,600.
Okay, all right.
So you're done with that, move on to the variable. So for net income for variable, 37,400. One of you guys are okay. So that is basically on chapter 11. So make sure you complete homework by Monday for chapter 11. And next week is our last week. Everyone's going to read the results. Also, if you did not do the quiz for chapter 10, open it up again today. So please, if you have not already taken it, and I will grade the ones that I have today. Any other questions?
What was the net income again for the final problem?
Oh, I'm sorry. For
Variable.
variable, 37,400.
Okay.
Okay. All right. So if there are no more questions, I will let you guys go. Just make sure you do the homework, and if you haven't done the quiz, do the quiz today. And that's all I got. All right. Thanks, guys. I'll see you on Tuesday. Have a good one.